Hello and welcome to the LP Financial Services Forex Training Class Introduction to Technical Analysis videos. In Lesson 1, Chart Patterns, we are now ready to describe pattern number 5, the bull flag pattern. A bull flag pattern occurs during an uptrend. It is a continuation pattern, which means it signals that a given chart will continue to go higher. It consists of an initial upward movement called the flagpole. This is followed by a consolidation, as it stays between a very narrow trading range, followed by a breakout and continued upward movement. When it breaks out of that range, it gives us a buy signal. The target for a bull flag is found by adding the flagpole to resistance to find the target. Can you see the bull flag pattern? As we take a closer look at pattern number 5, the bull flag pattern, we see an initial rise that took the market higher as the buyers were in control. After a consolidation period, the market works its way down, staying within very narrow ranges. After the breakout, it gives traders a buy signal. To find the target area, one takes the last area that the market rose from and adds it to the top of the flagpole to get our target area. This is a great example of a bull flag pattern. A bull flag pattern is a continuation pattern. Moving on to pattern number 6 is the bear flag pattern. A bear flag pattern occurs during a downtrend. It is a continuation pattern, which means it signals that a given chart will continue to go down. It consists of an initial downward movement called the flagpole. This is followed by a consolidation as it stays between a very narrow trading range, followed by a breakout and continued downward movement. When it breaks out of that range, it gives us a sell signal. The target for a bear flag is found by adding the flagpole to the bottom of support to find the target. Can you see the bear flag pattern? When we take a closer look at pattern number 6, the bear flag pattern, we see the market had an initial downward movement, followed by a rise in a tightly consolidated narrow range. When the market breaks out of this range, it gives us a sell signal and will continue with the trend. To measure a target, you take the flagpole and add that distance to the bottom of support to calculate the target. This is a great example of a bear flag pattern. In our next videos, we'll talk about pattern number 7, the ascending triangle, and pattern number 8, the descending triangle pattern. Bye-bye.